Hello, I'm going to break down a few of the trades that I'm currently in that I've taken this week. I always analyze on the daily chart and on the weekly chart, and you can decide to take it off the daily time frame, or you can decide to take the trades off the weekly time frame. Sometimes, they kind of line up both of them. But in this video, we're going to look at the daily time frame and the weekly time frame. So let's get to the chart and see. Okay, so we'll start out with AUD, USD, Australian dollar to US dollar. I've drawn out the zone. It's really for the daily chart, but you can also see here on the weekly chart within the zone we have a strong reaction point here. When price came up, it bounced out of the zone. Same thing here, it bounced off the zone. So it's two very strong reaction points here, both heavily down here. Again, when it came up here, it bounced heavily, and what I think is that it will bounce again because this is a strong zone. So this is on the weekly time frame. Let's go to the daily time frame. I think I probably took it off the daily time frame. I don't exactly remember, but I think again these were the same points as the weekly. Here on the daily we have 1 point. It reacted from this area. 2 points reacted, a new reaction here, and when it came to the about the middle of the zone, I already had an alert here. The way you put an alert is just to right click. You just right click like this and you put add an alert. I don't really name them because it's already on them, but yeah, I put it in the middle, about the middle, and that's what I did now as well. When I took the trade, my alert went off. Usually what I wait for is that the price comes up here and then it starts to reject at some point. I didn't do it here because sometimes the alert hits and then it starts to reject kind of right away, and you don't want to miss out the trade. But maybe I took this trade a little bit early. It doesn't really matter. But usually I see if it starts to create a wick like this, it probably will soon at some point. That's a strong confirmation that it's about to react. So anyway, it's okay if you take it from the middle of the zone. So all you do when you analyze this chart is that you find strong reaction points, like I already showed you here, and you don't really know exactly which one of these it will react from, but they are quite close, all of them. So that's why you put a line in the middle of them, and really you don't even need a zone, but I think the zone sometimes can be easier to look at. But yeah, the alert went off, and I went for a 1-to-1 short, a short position on the daily time frame. What I think it will happen is that since it reacted here, I think it will start to go down probably soon. It can also go all the way up here and start to react. I mean, it can hit the stop loss as well, but it's more likely to have a reaction before that and actually hit my take profit. So that's how it is in trading. You never know exactly which ones that's going to hit, but trading is about probabilities. So the probability of this trade actually hitting my take profit is a slightly bigger probability than it hits the stop loss. If you don't risk all of your account, let's say you risk 2% of your account, then in the long run you will start to make more and more money. Maybe you will lose a few trades, but then again you will win more than lose in the long run. When you trade like this, it's quite easy because, sorry, I'm going to turn off my camera again. Yeah, it's quite easy because on the daily and the weekly time frame, things doesn't happen so fast. You actually have the time to calculate your risk and your lot size, and also the levels they hold stronger, which means like the levels or the reaction points is stronger than, let's say, on the 15 minute or on the 5 minute or 1 minute or whatever. And it's easier to take good decision because you don't rush into them. It doesn't really matter if you take this trade now or in 1 hour. I mean, it can move a little bit, but compared to a whole day, that move is not so big. So yeah, I just want to say that. I'm going to go back to the chart. Yeah. Next one is Euro AUD. I am taking this off the daily chart here. You can see it have a lot of reaction points already. 1, 2, we can count this, 3, 4, 5. I mean, this is a big wick, so you could call this a reaction point. I think it's a reaction point here and here. The middle center of this is like, actually usually I don't have the box when I look at the chart. I just look at the chart and I like, okay, where is price currently, or where will it soon come? And then I will see, okay, point, reaction, 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 here, here. And yeah, that's about it. So I took this a few days ago. It could have been actually the end of last week. I think I've been holding this trade over the weekend, which is fine to do when you do swing trading. But yeah, so it's halfway, a little bit more than halfway to the profit target now. And yeah, it started to reject from here. And when it had started to reject, I found a trade like a few days after. Okay, I thought like, okay, it's a good sign. You don't want to wait too long because then it's too late. But here you see it has started to reject. So that's a good sign. It started to reject just like the other ones here. So yeah, this one will probably play out within the next few days. We will see. You never know, but we will see. If it starts to go the other direction, let's say it's almost hits the target and then it starts to go back, maybe I will close it at the break-even point. But most likely this will hit. Next one is Euro USD. Here I use this brush here to point out the reaction points. You can do that. You don't have to do it. But on this one I did it. And what am I doing here? I'm just going to wait a second. I'm just going to go back here. Again, we're on the daily chart. I see reaction, 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 reaction. These are all points that are valid to take a trade off. You see my alert hit about where the red line is. The red line is not my alert, but it hit in the middle of that box because maybe the trades or maybe the price action was down here and I saw it was on the way up, and I placed the line. I added an alert and I placed it in the middle of the box, and when price came up to that alert I took the trade because, like I said before, it had already reacted from these points before, so it's quite likely to happen again. And that's on the daily chart. If I go to the weekly, we'll see. Use whichever one is clearer to you. If weekly is more clear, then use that. If daily is more clear, then use that. Sometimes you can see it good at both. But here you can see reaction, reaction, reaction. And yeah, I placed the trade here. I think it's going to hit the target. It's going to probably start going into profit very soon. We're about at break even. I just took the trade. Okay, next one, CHF JPY. This is a very clear zone on the daily, at least. This one, okay, so when I come to the chart, what I actually usually do is I come to the chart, I click this one, horizontal line, and I find, okay, where did it react? I usually go to daily first. I see a point here, a point there. It reacted, it reacted, it reacted. So I think that somewhere around here it will probably react again. And there is nothing to the left, so these are the points we're looking at now. 2, 3, 4, 5, whatever strong reaction points is enough. Here in this case it's already 3 reaction points. But yeah, before I come here, I placed an alert. I'm not going to do that because I already showed you. But I'm placing an alert. Or actually, before price comes here, I was going to show you the horizontal line. I place it. Okay, so I think, yeah, the middle line of this is kind of like here. I could have placed it a little bit higher as well. Maybe I actually did. I think I did. Place it here, and then it started to reject. After a few hours, whatever, you can see the wick here. That's a sign of the trade starting to reject. And that's where I took the trade for a 1-to-1. You don't want that to be too big. Because then if it's too big, you can maybe hit it sometimes. Maybe price will go all the way down here. But it's kind of like, oftentimes it won't hit if it's all the way down here. And this is just the way I trade. There are many different ways of trading, but this is the way I do it, and it works when you do it on the higher time frame, on the daily and the weekly. So this one is very clear on the daily. I'm just gonna show the points, 1, 2, 3, and now price comes up. I have an alert here on the red line. It started to reject, and yeah, this is a point as well. I place a 1-to-1. If you want to be safe, go for maybe 2% of your account. Let's say you have $2,000. I don't know, start with $2,000, or actually start with a demo account to prove yourself. Maybe $3,000, $2,000 or $3,000. Prove it to yourself that you can be profitable within, you know, don't look at the first, don't look at the first 5 trades, because maybe they will be winners or losers. Look at the first 20, 30, 40 trades and see within those trades, are you profitable or not? Do that on a demo account. If you're profitable, then you can go place the same amount of money that you had on the demo account. You can place that in the live account, and then you prove it with the live account. You need to have some capital, maybe 2,000, 3,000, even 5,000, but it's good to be comfortable with being profitable. And then obviously to make a lot of money, you need to have a lot of money in your trading account. So put aside money on from your day job into your trading account. And when you start to be confident that you are actually profitable, that's when you can add more into that account, and you add from your day job or whatever income you have, you add that to your account. And then also now, the more you have in the account, also that 2% of the trades will start to add up, or the wins you will have will start to add up. So anyway, a lot of talking here, but I'm going to go back to the chart. So this is the weekly point reaction. It starts to react here. Right now it's at break even. I recently took this trade. I think it will go down here. Maybe happen, maybe it won't happen. But the probability is higher that it will go down than that it will go up. Maybe it goes up first, all the way up here, and then it goes down, but it's more likely to, the probability of it going down is bigger than it actually going up. And that's all we're doing here. We're playing with probabilities, and you have to know that you can be the best trader in the world, you still trade with probabilities, and you still have to learn to take losses. And that's why you can't risk too much of your account. Of course, you could, if you're very confident, you could go to like 5%, 10% of your account or whatever. But to start with, go with much lower. I would say 2%, start with that. Do it on a demo, and then you can start to do it on live account as well. So now we go to the weekly. I don't know if you looked at that. But yeah, this is the weekly chart. Same again. It has one reaction point here. Actually, it bounced, and now I think it will happen again. So maybe this trade will play out within 1 week or 2 weeks or something like that. But yeah. So that's it. You have to be patient. But also, like, once you're in the trade, you don't have to look at it all the time. You can have alerts if you want to, like if you want to know where it is at, like half the way. Of course, you could place an alert, or if you want to know if it's in drawdown half the way, you can place an alert. But it's not like you don't have to look at this all day long. You have alerts when you take the setups. But yeah. you have a lurch when it comes into the zone, unless it's in the zone, like here, I place the line here, unless it hits the zone, or hits the line, I should say, then you do nothing. When it hits the line, then you take the decision whether or not you are going to take the trade. And like you see, sometimes, I'm in 4 different trades now. It's okay, as long as you don't risk crazy much on each of them. All of these can play out, all of them can win. Maybe a few of them will win. Let's say maybe 3 of them will, 1 will lose. Maybe 3 will lose and 1 will win. But in the long run, you're going to be profitable. But for God's sakes, do it on the demo account first. Okay, that's a lot of talking. Be patient. This is a marathon. You have to do the same thing over and over again over the weeks, months. It's a game of being patient, and I think that's a big reason why many people are not profitable. First, you need to have a strategy. You have a strategy here that works, but you need to prove it to yourself that it works. Okay, see you next time. Have a great day, and yeah.